right, welcome to the closing beat, everybody. How we doing today? Happy Tuesday. Welcome to our show. Thank you so much for watching. This is a quick show we do to teach you stuff. I'm not going to go over a whole lot of what we do. I just hope you check out the website. Come on over to Jazz Wealth. We manage our own funds, and that's kind of why we're able to get more detailed with you here, because we're looking at everything all the time. But oh boy, I've got a lot to cover today, and I want to teach you guys some stuff too. So we'll dive into it. If you take a look over on the right-hand side of your screen, you see the Dow was a little bit lower today. The S&P added third of a percent, 3/4% on the NASDAQ, and the Russell 2000, though positive, was sort of quiet for the day. Let's go over to the charts and take a look. Here's the S&P 500. There you go. Hitting new highs, closing at all-time new highs today. Everything looking good there. Some of the notable stuff in there, maybe Gap. You got GPS a little bit higher today. There was an analyst that came out, said Old Navy and Athleta were not, or Athleta, however you say it, were not priced in, given the fact that they're not going to do the spin-off, at least as of now. And so that helped the stocks up about 10% on the day. If you go over to the NASDAQ, you got about a 1/3% gain, all-time highs again, looking strong there. That was your leader. It's largely because of some of the big familiar names you know of. Facebook just higher today. No real great news, just overall strong. People maybe moving some money from Apple over to old Facebook there. Amazon moving higher as well, up 1% on the day. $3,350 is where that thing is riding out at. So looking good there. And Microsoft hinting at a new breakout. If you're looking at a technical chart there, maybe something you're interested in. Microsoft's obviously been strong. There could be more volatility there because of the TikTok deal. If you don't know, Oracle is getting support from ByteDance's investors that are here in the U.S. saying, hey, we like Oracle. If you're going to sell to anybody, sell to Oracle. So that stock wasn't really higher on the news, but that could explain why you might see some volatility in Microsoft. They're clearly the front runner, and as of now, the front runner, but that's what you got there. Let's talk about the old Dow, right? Here's what's going on with the Dow, and I got some geeky stuff to share with you here today because you guys always ask this question, so I'm going to share it with you so you know, just so we answer all these questions. In the Dow today, here's what you have. The Dow is making their biggest change to the index in over 7 years, so I've got some data here for you. Here's what's going on. Salesforce.com, which by the way is up like 12% after hours. Salesforce.com added 3% on the day. They're going to the Dow. Amgen also going to the Dow. That one added about 5.5% on the day. Huge volume there. And Honeywell, they're also going to the Dow. That's the reason those three stocks were higher on the day. Now, if they're going to add some stocks, they got to take some stocks out. So what are they doing? They're taking out ExxonMobil. They're taking out Pfizer. Notice how these are lower priced names. Did you notice that? And they're taking out Raytheon. So you're adding in higher priced names. You're taking out the lower priced names. That's because of Apple and what's going on there. Like I said, it's the biggest change in over 7 years. What we did is went back to the days of old Intel. You know, Intel and Microsoft were the first two tech stocks from the NASDAQ to be added to the Dow back in 1999. Since then, there's been a total of almost 20 changes in the Dow, meaning they've adjusted things along the way since 1999, 18 times, right? Got 20 years, 18 changes. It's about a change a year there for the Dow. What's happened here, you had names like Chevron. They were actually taken out of the Dow, taken out in 1999, added back in 2008. So you say, well, why'd they take out ExxonMobil and they didn't take out Chevron? Well, that's because, well, they've already done that, right? So it wouldn't be very cool of them to take out a stock, put it back, then add a stock back. That might cause a little concern. So that's probably the reason why you see ExxonMobil getting taken out this time. Now, here's the data for you. From the time a stock is announced, like today, the announcement of Salesforce and the others, from the time a stock is announced to the time that it is actually added, this will be added on the 31st of August, so coming up here real soon, the median gain for that stock is 2.8%. All of these have already gained more than that, but between now and when they're added, median gain is 2.8%, positive 94% of the time. So almost in every single case, when a stock gets announced that it's going to be in the Dow, to the time that it's added, that small window there is a median gain of 2.8%. Obviously, that's very good news there if that's something you're looking at. Stocks that are getting taken out, like your ExxonMobil, your Pfizer, Raytheon, things like that, from the time it's announced to the time it's taken out of the Dow, only positive 22% of the time. You can kind of see that today if you were to happen to look over at ExxonMobil, right? It's already selling off, so a little bit of weakness there for that one there. Here's what I want to share with you today. Get a little bit geeky here. You say, well, what do stocks do going forward? Well, when stocks get added, so from the date that they're added, going forward, 3 months and 1 year is the data that we had here. When a stock gets added, remember there's 18 times that this has happened, the forward average performance over the next 3 months is positive 1.91%. So average gain of 1.9, a median gain of 4.8. If you look out 1 year, from the time that a stock was added to the Dow, there's almost no time where you see positive results. Average loss 8%, average loss 10%. In fact, more times than not, when a stock is added to the Dow, you go out 1 year, it's negative, right? It ends up getting sold off there. Now, what about the stocks that get taken out, right? Is there an opportunity there? If you look at stocks that get booted from the Dow there, average performance over the next 3 months, minus 2%. Median gain of 1.3%, but 1 year. That's what's interesting here. Look at 1 year. The stocks that get added or removed from the Dow tend to have negative performance. In other words, when a stock is flat out just adjusted from the Dow, put in, taken out, whatever, the average performance and median performance going forward is negative. So these are stocks that may be experiencing a little bit of trouble. That kind of makes sense when you think about stocks that are doing well tend to get added to the Dow. The ones that are doing poorly get taken out. So the ones that are doing well, once everything's adjusted, maybe there's some profit taking over the next year. The ones that are doing poorly, you would think, oh, the Dow did a good job. They took those stocks out. They're underperformers. They continue to underperform. In both cases, whether the stock was added or removed from the Dow, the positivity rate remained the same. So over 3 months, there was a 55% chance that you were going to have a positive return if you were to buy a stock that was added to the Dow or buy a stock that was removed from the Dow. Over the next 1 year, you had a 44% chance that that stock was going to be positive, whether it was added or removed. So I know those questions were going to come up today because it's the Dow. It was a much smaller index for us to go through in a faster amount of time. So there is the data for stocks that are getting added or removed from the Dow. Hope that helps. Okay, so bottom line is here, you've got a lot of activity taking place. It's not as much money as the S&P, so you're not likely to see a lot of extra volatility other than the day of today was announced and the day that they are officially added. So that's what's going on overall with the Dow today, and that was kind of the big news overall. So before we move on, I'll talk about our FinTips videos, bottom right-hand corner. If you don't know, we also do 3 videos a week where we talk about just real quick FinTips. We call them FinTips because they're real short, 6, 7, 8, 9 minutes, whatever. And so this week we've got some good ones there. Bottom right-hand corner of your screen, you can see what's going on there. In our research site, I'll cover that in a second. We've got a lot of great posts there. If you can't be a customer of Jazz and you just kind of want to learn, well, we put a research site out, and unlike everybody else that seems to charge thousands of dollars for things like this, it's $13, right? So if you want to join it, it's $13, really helps us out. We're doing a lot of little things behind the scenes, and so that little extra bit, believe it or not, really, really helps us. I hope you'll check it out, jazzwealth.com/research. Okay, let's go over to the sector breakdown here for the day because it was kind of a mixed bag as people were adjusting to what was going on in the markets and in the Dow. For once today, it wasn't all tech again, right? We got the same thing going there. You've got a mixed bag in terms of how they performed. You can see the red and green on your charts there to kind of highlight that. I'll take a look at a few of them here with you. I thought financials showed good relative strength today, although they finished a little bit lower than the markets all day long. When the markets were trying to show weakness early in the morning, you saw financials hanging in there. So good recovery in financials, which is good to see if you're interested in the financials. They've struggled a little bit. Healthcare stocks hinting at that breakout. That's what we talked about up here. Still hinting at that, still holding up tight. Very good strength relative to the market. It'd be nice to see the markets pull back a little bit and see healthcare hold up. That'd give you the final clue that maybe that's where you should participate. We'll see what happens. Communication services higher today. 3/4 of the day's gains came from Facebook. So this one sector in the market was largely driven by Facebook today. Very interesting there. Home builders pulling back just a little bit. You got great home building numbers out today. New home sales much higher than expected, but the home builders are a little frothy here, a little overbought, so they lost about 0.5% on the day. This is good news because actually if you go over to our research site, I posted this right here. Housing market on fire. I'll just share it with you so you can see. We talked about the housing market, gave you some stats there, and it gave you some stocks down here at the bottom. The problem was they were extended. Those stocks were extended, so not very cool there. We wanted to see these stocks pull back, and that's currently what is happening, so you're excited to see that. Just wanted to point that out. So if you're in the research site, you've got a reason to now go take a look at those stocks and see if they've started to pull back, because a pullback would be great in this sector overall. All right, moving back over to the sectors here, we've got energy. That was your worst performer on the day, down 1.5%. Basically, it just continues to roll over. You got oil inventory numbers coming out tomorrow. Now, a lot of the reason energy was lower today was ExxonMobil, one of the bigger holdings in that sector, getting taken out of the Dow. So that was the biggest drag on the sector as a whole. Like I said, you got oil inventory numbers coming out tomorrow. Speaking of oil, it's waking up there. It's setting up for a reason to continue this pop. If the inventory numbers are good tomorrow, we'll see what happens. It's largely expected that the hurricane coming through that you're going to see some of these pipelines come offline, and therefore the inventory won't build as much. And so that's one of the reasons you saw the oil price of oil moving a little bit higher here on the day. Not a sector, but I'll point it out real quick. Semiconductors moving to new highs today, looking real strong. That's going to be because of the Micron recovery. So this little counter trend bounce you're seeing in Micron. AMD had a good day, back to highs as well. And Taiwan Semiconductors up 1.5%. This is the biggest holding inside of the semiconductors if you're interested. Moving on over to gold. So you got gold pulling back just a little bit here today. Good China trade talks going on. They had a phone call. Apparently they're happy with each other. Expect that to continue going into the election. There's not going to be any ruffled feathers there. So the market's like that. That means there's less panic. That means less reason to be in the price of gold. Also, you saw the price of the dollar continuing to recover off this low. People thinking maybe it's put in a bottom there. That would signify maybe some weakness more in the price of gold. Bottom line is, to be in gold, you got to have a real good reason. You got to be expecting panic coming up here. This thing just keeps floating back lower. All right, moving on to some notable new highs for the day. Let's take a look at what we have. A couple interesting ones here. So you've got Lind, this is the one, by the way, we happen to own every single new high today. So if you're in one of our funds here at Jazz Wealth, that's kind of an odd thing that every single stock, all 29 of them, we own all of them, so we're happy to see that. Lind, 0.5% higher today. That's that one I keep mentioning, is more of a sloppy breakout, but it's doing its thing. Salesforce.com, obviously, notable new high today, getting added to the Dow. Also, after hours, they reported earnings, up 12% after hours. It's trading at 242, way off the screen. Can't even show it to you. Got to go like this. It's trading way up here, 12% higher. Careful, right? Careful there when you see what's where it's gonna open tomorrow. But that's a notable one as well. They raised guidance. That's a good thing. Raising that guidance. That's what everybody's looking for. McCormick here, nice and strong, hinting at these highs. Not a lot of volume, right? But it did make new highs today. It's hinting at making that next move, starting that next trend, although it's getting weaker by the day, so be careful there. Monster, of course, one that we own. We're happy to see that move higher, up 0.33% on the day. Just a real strong stair-stepping uptrend type pattern here, looking real good in the short term. And ConAgra, that's the breakout we mentioned the other day, continuing to move higher. It's a consumer staple stock. It's not normally known for being one of the more exciting ones, but of course that's a notable new high. And there were no new 52-week lows on the day. That is something that has continued for quite a while there. And maybe my little thing didn't save there. That looks like a mess. All right, let's go over to the watch list here today. We'll take a look and see what we've got. Trying to do something a little different. You're going to recognize a whole slew of different names on the screen there. What we're looking at today is stocks that are due to report earnings between tomorrow and the rest of the week, but that have the best results on earnings. So I'll go through them real quick. You can make your decision from there. Box, one we've been talking about here lately. This is Dropbox's competitor of sorts there. They beat on earnings 74% of the time, beat on revenue 74% of the time. However, the average move is down about 3%, negative 2.99% if you're interested in that. So if you've been thinking about buying this stock, you may hold out. I'm not saying it's going to be lower, but the odds are it's going to be lower if you look at their previous earnings history. Looking at NetApp. We call it NTAP if you're a trader out there. That's what the way we say it there. NTAP down 1.25% on the day. They beat on earnings. This is coming up tomorrow. They beat on earnings 72% of the time, 65% of the time they beat on revenue. The average move is actually up by 0.83% on the day following that. Going into the 27th, we've got earnings from Abercrombie & Fitch. So you see that listed there. Decent day for Abercrombie, actually. Beat on earnings 71% of the time, 55% of the time on earnings. Average move is 1% higher if you're looking at that one. Dollar Tree and Dollar General are due to report as well on the 27th, but Dollar Tree is the better performer historically. They beat on earnings 62% of the time, revenue 57% of the time. It averages a 1.3% move higher on earnings day. Dollar General averages a move lower. So if you're looking at those two, you're trying to find somewhere to play, this one averages the move higher. I'm not saying it's a buy, I'm just giving you the stats there. Ulta Beauty, this is the store that sells a whole lot of makeup. It's a big, big store. Beats on earnings 88% of the time, 73% of the time beats on revenue. The average move is 4.5% higher, which is also the move that's priced in at the moment for Ulta Beauty. So that'll come out on the 27th if you're interested in that one. Okta, which has been a really strong one here lately, up 2% on the day. There's only 13 reports. This is a newer company, so they don't have a long history of reporting earnings, but of the last 13 reports, they've never missed on earnings. They've never missed on revenue. The average move is 4.5% higher on earnings day. Again, the data's not as thick here. You don't have as much history to go on, but if it does average that same move, it's going to be about 4% higher, puts it about 218.50 if that's what happens. We'll see. This is also a very volatile one on earnings, so if you own it, something you want to know that's about to happen there. Workday also going to be due to report. They beat on earnings 90% of the time. They beat on revenue every single time there. The average move, perfectly flat. So if you own that stock and it doesn't do anything on earnings, that's what it's supposed to do, and that's it. One last one I'll throw in there. They report on the 28th. This is Five Below, and I point this one out because it's got an interesting technical pattern there, right? A series of higher lows along the way and equal highs. So it's this pinching, compressing of price. Volume's very controlled right now. Any sort of shock, raising guidance, beating by a mile, whatever it may be, could cause this stock to really pop. It's kind of setting up for that at the moment. They beat on earnings 84% of the time, beat on revenue 81% of the time. The average move is 4% higher, 3.91 to be exact. So if that happens, you have a reason now for people to buy that stock above the breakout, and maybe that happens. Maybe we could follow up with it tomorrow and see what happens. But that is our watch list today, giving you an idea of some stocks that are going to be in the news over the next couple days, and all because of earnings. There you go. All right, let's move on to stocks in the news, and then if you have any questions, feel free to start posting your questions there. If you want me to take a shot and try to answer them, I'll go through this, and then we'll take your questions. Best Buy, lower today. They didn't get the message, man. Best Buy reported lower guidance. And the name of the game this earnings season was guidance. You could have earnings that beat. In fact, if you look at earnings for Best Buy, they beat by 62 cents. Revenues came in better than expected, lowered the guidance. That's not good. That's going to cause a stock to move lower, at least for this earnings season. That's been what everybody's been focused on, so that is Best Buy there. Looking at Delta Airlines, they're going to furlough 2,000 pilots early October. The stock really shook it off today, up 1% on the day, not too big of a deal. Netflix, which has been a sleepy stock, it hasn't moved a whole lot around this $500 number here, kind of been flat there, trying to show a little sign of strength there. Netflix in general got an upgrade today. Piper Jaffray actually said that the strong subscriber trends are likely to continue even after this COVID virus continues and moves on. They think they're going to retain a lot of their subscribers. It moved the stock a little bit on the day, but that was in the news. LVMH is delaying their acquisition of Tiffany, and I believe that it was about 3 months. They're moving the closing 3 months out, so the stock was lower by 4% on the day. Maybe some games being played there. And Elon Musk had some good things to say about the extended life of the batteries that they're working on, maybe coming out in the next 2 to 3 years, teasing the stock, keeping it up there. For a guy that wants the stock lower, he sure keeps rallying that thing higher. We'll see what happens there. Apple is going to be opening up some of their stores in the U.S. They've been closed because of the virus. That's good news. A lot of positive virus news coming out lately, so you can't, that's a good thing. Tomorrow, you got earnings from Dick's Sporting Goods, Box, like we talked about, NTAP, like we talked about, and Williams-Sonoma. Splunk also is going to be reporting, but they are expected to report a loss. They're working on things. They're still trying to get things going. And finally, dividends from Maxim coming out 48 cents. Let me just verify that. Maxim coming out 48 cents, paying their dividends, and Scott's Miracle-Gro paying out $5. So you got a big $5 dividend coming your way if you happen to own that one. All right, I'll take a chance here and try to answer your questions if I can and figure out how this works. We go over here, we go over here. Let's see what we can do if it works. If it doesn't work, I will go on over and see what I can do. Is it freeze on you? That's a shame, man. Jason looking good in that picture there. There's Jason. Quick question. I have a 401k with a past employer. What is recommended? Is there any fees associated with rolling it over? You have 3 choices. One of them, I can't tell you what to do, but don't do it. Number 1 is you can roll it over into your new 401k. If you happen to have one at a new job, contact your HR department. They'll help you get that started. The other thing is you can roll it over into your IRA. I always suggest that because you get control over it. I know people think like I make that suggestion because I hope you roll it over to us here, and I do. But it's got to be good for you, right? The main thing there is no matter where you go, if you roll it over to an IRA, you have control. You can choose what you want to do with it, what you want to invest in it. You're not limited to those funds. And it's not that it's any better, it's just a little bit better. And the third thing you can do is just cash it out and move on. Don't do that, right? You pay penalties, you pay taxes. Any rollover to a new 401k or to an IRA, there are no fees, no taxes, or anything associated with doing that rollover. And many times, like us here at Jazz, we'll just help you do it, right? So it's real simple for you. But there you go, Jason. Hope you got a new job, and hope you're enjoying that new job. I like it. T, well, all right. Hey, Dustin, with the Fed taking on Thursday, or talking on Thursday, and everyone's saying that they will give their plan to force above average inflation, how do you see the Fed accomplishing this? It's not official yet, but they were working on a study to see how they were going to force inflation by maybe capping the curve, which is largely expected to be the main thing that they do, cap the long end of the curve so it stays real low. I don't know if they're going to decide to do that or not, but we'll see what happens. I don't know. Right now, it's all speculation what they're going to do. Yep. So we'll see. Well, I love it. I got to give it to real quick while you're unless you're stuck over there. Got to give it to the Neo traders. If you stuck with Neo, check this out. I mean, I'm kind of against the stock, right? But hey, anything that makes you money doesn't matter what someone's opinion is. But look. 20% in one day for Neo. I mean, that's an impressive move. I'm not saying it's a buy or anything, but I know some of you have this stock and you're passionate about it. Well done. Well done. I would not have predicted that. So good job there. I'll throw it in, admit when you're wrong sort of thing. That one looks really good there. Very good. Does unemployment money count as income that can be used towards a Roth? No. If the unemployment money, if you're talking about being paid, I can't think of the word. You got let go from your job, they're paying you a severance. That can be included. Can't be included in your 401k, but if you want to use that money, it's of course taxable. You could use that in your Roth IRA. If you're talking about cash money that's given to you from your state there, no. It's got to be earned income for that one. Yeah, I'll give it to you. Yeah. Online gambling, is that the next boom sector? It's certainly doing well lately. I mean, sports coming back a little bit, people wanting to bet on sports and not so much on stocks and stuff. It's helpful. Technology's still improving, getting better and better, and tighter spreads and everything. But yeah, I mean, you could argue that. I mean, there's room for that, and the states are starting to loosen up just a little bit there. So yeah, I'm with you there. What are your thoughts on using a brokerage account as a savings account? Using it is fine. What you choose to invest in is, to me, a big deal. What we did is we took our low volatility fund, it's on our website, go all the way down to the bottom, and we made it essentially a non-moving fund that yields over 2.3%. So our customers that came to us and said, man, my high interest savings is paying like 2.2% now, what can I do? Well, at least we have that. It doesn't move. You do not use your brokerage account for savings and then go invest it in the S&P or Tesla or Neo or something. You want something that's very calm that yields a higher amount. So that way, think about what just happened with the virus. Everything sold off, and you probably had an emergency that you needed money for. What if all of your money was down 30% at the time that you needed it? So we don't want that. We want something really slow, compressed, that almost doesn't move. So that's what we do here for customers that need that. Yep. Thoughts on Walgreens as a long-term play? You can't argue with their position, market share right now. There's a lot of adjustments going on there, acquisitions and everything. You can understand why they've used a lot of their cash, and if you're following it, what's going on. Can't argue with you as far as the discount there, right? That's not bad. It is certainly a value play, and you can't argue that stock being something that maybe is worth looking at. Yep, I like it. You want to use your dividend income to count for Roth eligibility. Earned income. You go and earn it. Not it was given to you, which I guess you could say is earned, but no, it has to be earned income. You waited tables and you got a tip for waiting in tables. You had a job, they paid you a salary, things like that. Yep, earned income. Since nobody ever sees your legs, do you skip leg day? I don't even wear pants, to be honest with you. Wear shorts. I love it. All right, we'll wrap it up there. I appreciate you guys hanging out with me here today. Maybe we'll show the legs one day and do something with that. But hey, have a great rest of your day. Thank you so much for coming by. Hope you learned something. If you did, hit the subscribe button. Tell your friends. Go to your mom's house. Use that. Hit the subscribe button. We really appreciate it. And thank you for all the support. We will see you again tomorrow, and enjoy.